All right, so we're back. This is Curtis May. I want to do a quick recording. And this one is on the Money for Life plan. So, one of the things I like to do as a financial educator is I like books because I want to empower people to, if I'm not around, I want you to be able to think. And so a lot of times if I find a book or good books that I like that get across what I want to get across, I always tell the client, I have no original thoughts. It's like, there's nothing new under the sun, so, a lot of times when I read things, I have experiences, I grew up in business, I work with people every day, so I am creative within a structure. And but one of the things I like with some of the books is I can go back and give you reference materials. That's why I'm big on telling people, listen, you have to build a library, okay? And so if you read A Rich Dad Poor Dad, or the book I'm going to discuss today, Money for Life, or Becoming Your Own Banker, or what's that book I like? Uh, Economics in One Lesson. You really start to understand the Austrian economics, introductory to Austrian economics. So really understanding true free market economics, not this nonsense they teach you, this Keynesian nonsense they teach you in college. So you can understand how the world really works. Then you want to be able to apply that to your personal economy so that you can reference stuff, because you could read the same book 12 months from now, but you've had different experiences, so it reads different to you because you're different. You've got different life experiences, so you've got to stay, always green and growing. So the Money for Life plan is I can always reference. So if you work with us, this is kind of like what I want to give people is a money operating system. Jim Rohn once said most people don't have a money problem, they have a philosophy problem. Okay. And so most people have no plans. So you're out there sailing around with like a ship without a rudder. So if you look at computer, Windows is an operating system. Well, what's your money operating system? When money hits your account and your personal economy, what's your philosophy? What is the order? Or as what's his name? Tony Robbins said, what's your syntax, your recipe for how you handle money? And so I'm going to give you ours that I try to follow, that I'm teaching clients, because I believe you want to have, basic fundamentals that you do that are, this is what prosperity economics is all about. It's based on principles. It's not based on, trick plays and the fad of the week, or speculation. It's based upon fundamental principles. And so my favorite book on this concept, and so, what really turned me onto the concept initially was Becoming Your Own Banker by R. Nelson Nash. Met him, been to his 8-hour workshop at least twice, right? The book that really spoke to me, and this is one of my required reading books, is in working with us, is this one, which is Money for Life, and Jeffrey Reeves, and I'm actually a Money for Life guide, on the, kind of an expert in the book and teaching this philosophy. So what I'm going to do is I am going to share with you all a concept. So I'm gonna start at the bottom of this little worksheet. And so what happens is I've kind of, taken the book and I want to say boiled it down to the S. Actually, it's a lot of stuff. The book is really powerful in my mind, and it's an easy read. He's a great writer, and it's a great story that keeps the pages turning. And it's not very long, but it's a good read, and you can go back through it. I still go through it every month a little bit, and new things come up. So you want to, you when you get certain things you want to study, and I'm gonna go over some of the books I like, and I kind of have infused a bunch of things together so that I can, all right, here, I'm gonna show you something. Here's where this is, and if you keep studying it, you will grow. Because you have to take yourself to financial independence. I can't help you do that. There's no advisor, there's no product that's going to take you to glory. It's all a function of this, of your human life value that you can create. Okay. And so I always tell people stop looking for solutions outside of yourself. Um, what is that? Dr. McPhee says it's upward, it's up, down, and in. I forget the thing. I gotta watch him do it again, but it's really profound the way, you're getting your inspiration from God. It's coming from into your head, so it's coming down in your heart and back out. And so anyway, I've screwed that all up. But let's talk about the frameworks. You got to begin with the end in mind, right? And so when I'm talking to people, this is what I'm this is the what I call the end of the movie, okay? And this is what we call the framework of a strong personal economy, okay? And the four pillars. Here are the four pillars of a strong personal economy. So think about this. How would you feel, okay, if you were free from debt to others, what I call non-preferred debt, okay? And so you had no credit card debt, no car loans, okay? So we teach a strategy of the private reserve of learning how to be the bank. So if you're going to be in debt, then at least owe it to yourself, because see, here's the thing. 35 cents of every dollar you spend leaves your personal economy in the form of debt to others. Okay? That is a wealth transfer. That means that is money that is leaving, right? So let's say this is your financial statement, right? And so you got income, this is horrible, expense and asset liability, right? So if you've got $10,000 debt here, let's say a car loan, well, you got the debt. Let's say you have your balance in your car loan and you got a $350 payment. Well, what's the direction of that money? Out, right? To whose financial statement? Well, the bank's financial statement that your 10K is the finance company's asset, right? And your savings are the bank's liability, but your that payment is their asset, because your car loan expense or your rental expense or your cell phone expense is somebody else's income, because there's always two sides of that story, right? And so what happens is that is money you're transferring away. Well, what if you let's say you had $10,000 in your banking system and you could collateralize your savings, pay the debt off, right? Now, but you owe it, but now who's the bank? You are. And so now you still have a $350 payment, but the difference is instead of going out of your personal economy, you can bring it back and recoup the majority of that money if you pay yourself back, especially with at cost, with interest, right? And so that's a whole other webinar. All right. So, but anyway, I want you to start to think a little bit differently. So, if you're going to be in debt, be in debt to yourself, right? The second pillar is you got to have money when you need it. See, most people are, I was just on this discussion, there were all these people talking about Bitcoin and everything. And so, most people, oh, I made 300% this month. Yeah, but you know what? Guess what? You have to, I wrote it on the timeline, I was on Facebook. You have to, first of all, I think it's speculating. It's not currency, because until you want to get paid on it, in it, if you go to work, it ain't money. Okay, only money's money. If you're gonna pay me in something, I'll take gold, but I don't think I'm gonna take Bitcoin. All right, but anyway, that's another story. So, but what happens is you got to have money when you need it. So you need ready cash. You want to store it somewhere where you have what we call where it is. Oops. Where you have where we call it CLUE, right? And so CLUE is an acronym for control, liquidity, use, and equity. Okay, and so you want to have your money, and so you have the money because see, what happens? Life happens. So You need money when you need it for emergencies, for layoffs, for illness, for you need a roof over your head, you need a new transmission, you need to have money for that. If you don't have money, you got to go into debt. But you also need money for opportunity. So I like talking about not so much emergency funds. After about 3 months, then it becomes an opportunity fund because you want to be able to have money available to get it when you need it for opportunities. For vacation opportunities out the blue, for business opportunities that come up, you need to have access to cash capital. The third pillar is you want to have income that you don't have to work for and you can't outlive. Okay? And so you need to learn how to work for cash flow. See, most people, when they talk about investing, they think it's all about, growing their net worth or growing their money. You cannot eat net worth. All right. You can only live on cash flow, right? And so one of the things that you have to work on is getting your assets to send you a check every month. And so you want to build cash flow. You want to, look at, not is my portfolio, my stock portfolio up. Well, okay, so what? It's an illusion because it's not real money until you need it. You can get to it when it's there. And think about this. How do you get the money? You've got to sell the shares and turn the shares. You got to sell the shares to get turned into cash, right? So now you've killed the cow, so to speak. You don't have any money. I mean, you sold the shares to turn it into liquidity. So now you've liquidated a portion of your wealth, and the hope is that you're selling it at a rate higher than what you bought it at. So I call it the greater fool theory. You're buying it at $20 to $30 a share, and you hope that you can sell it to some other fool at $40 a share. Other one, i.e., the other word is used that is you're investing for capital gains. Okay, because the only way you make money is if the markets go up. So if you begin to focus on income, your now what you look for, your whole investment strategy changes. And so, because your goal is to become financially independent, right? And so financial independence, I call it this, is you can live like you want to live from the income of your personally invested assets without a job, without your labor, without your business. See, business owners, hear me. If you shut your business down, your lifestyle is not supposed to change. Okay, so that means you've got to extract enough money from the business and buy other assets so that when you start working your assets, your real estate, your portfolio, your private lending, your whatever throws off the 10, 20 grand a month you need to maintain your lifestyle if you shut the business down. And so if you can't do that, I don't care if you're making $500,000 a year, $200,000 a year, $1 million a year. Income is not wealth. Okay. And so if you network marketers, when you hear this, everybody's chasing money in the cars and the bling bling. Listen, the company goes. I had a mentor in one of my early companies said, "Listen, the company can win, but you can still lose." All right, and so if they shut the company down, would you still be financially independent if all of a sudden your income stopped? And if you can't say yes, you're not there yet. Okay, and so don't fool yourself. All right, and so the fourth pillar, which really should be number one, is a legacy of wisdom and wealth, but with the emphasis on wisdom. See, because you can leave, it's an old saying, a fool and their money are what? Soon parted. And so what happens is that I've seen people, oh, Lord have mercy, I've seen people, one time I spoke at this church, and the pastor said, "You really got to talk to my sister-in-law, right? She really needs your help." Okay, well, I met with her and she really needed my help 2.5 years previous. This is, oh golly, it's probably 15 years ago, but I still remember this story, and maybe even 20 now, and yeah, because I wasn't married yet, so it's definitely over 20 years ago. And so what happens is I go to meet with her, and she had got a $500,000 settlement, and by the time I met her 2.5 years later, guess how much money she had? Zero. Okay. Not only did she have no money left, maybe $40 in the account that previously had a $500,000 in it. Um, she was $140,000 in debt. No telephone. Kids ran up a $3,000 phone bill. I mean, it was ridiculous. But because it's, you know, just because you get a lot of money dropped in your lap, if you don't, I mean, they're crazy stuff. Bought a house cash. Um, uh, sported her little half-working boyfriend for 2 years, cookouts every weekend with parties and live bands. I mean, it was, they had at least they, had fun with it, but, you know, money can go. $500,000 is just a good head start. You don't have no damn money. And that's what you have to understand. That can be spent, okay? Not that hard to spend that money, and somebody will always look and when you come in to help you separate that, whether it's car sales, whether I had a couple people run into hundreds of thousands of dollars and just really makes a series of bad decisions. So it drives me crazy. Same thing when I see ball players and stuff, get money and all of a sudden they taking care of their whole family. It's like, you ain't rich. You just got a high paying job. So this is somebody for me. I played ball. I know a lot of these guys, or I knew a lot of these guys. Now I'm old, so I tell people I played with that were big time. They're like, who are you talking about? But so anyway, so it's a legacy, folks. You've got to understand how money works, how to, why were the Vanderbilts within 2 generations broke, but the Rothschilds, the Rockefellers, 100 years later still have maintained their wealth because there are principles and you have to teach this stuff. And so one of the things that I want for my community is to understand, it says in the Bible, again, a wise man leaves an inheritance for his children's children. So, folks, we've got to learn how to teach legacy. And legacy doesn't mean money, okay? Wealth is not just about money. See, what are the traditions you have in your family? What are the recipes? What charities are on your heart that you want to take care of? So, what are family traditions you want to pass down? Your kids are your human capital, so it's more than just money. So I'm going to break this video up. I'm going to shut this part down, but I want to begin with the end in mind. So when I am talking to people, this is the end of the movie. These are the pillars. This is the foundation of a good, strong personal economy. You want to be free from debt to others. What that does is buy you back 35% of your income. So, you know, most people, again, are transferring their wealth away. The people that create the situations control the outcome so that they profit off of you not understanding the money game. The second pillar is money when you need it. The third pillar is you want to work to have an income you don't have to work for, you can't outlive, which is a function of what? Cash flow. And the fourth pillar is a legacy of wealth and wisdom. Thanks for listening. Curtis May out. Listen, if you like our access to our free ebook called Financial Planning Has Failed, what I want you to do is text cash flow to 26786. Again, text a lowercase cash flow, all one word, to 26786, or you can visit our website at practicalwealthadvisors.com. Thank you.